I'm here with David Kirsch, Managing Director at Research and Advisory Group Energy Intelligence. Hi David.
Hey, how are you, Alex?
It's good, thank you.
Thanks for having me.
Well, just to kick off, what do you think the biggest challenges facing the gas industry are right now?
Well, right now, clearly the biggest challenge is on demand. I think everybody agrees that there's a bright future for gas. There's a broad expectation that it will be one of the fastest growing fuels over the next several decades. But there are some challenges facing it. First and foremost is price competition. Gas has been successful over the last several decades, particularly against oil. But now it faces a much more difficult challenger in terms of coal. And what we've seen in several different markets is either an unwillingness to price carbon into the overall fuel mix, or has been a mispricing of carbon, as we've seen in Europe, that's actually encouraged greater competition in coal. The second biggest challenge facing demand is that the utilities are the largest buyers of gas, and many of these large buyers of LNG are facing deregulation in their domestic markets. So that adds to their own personal, if you will, or their own corporate uncertainty as to what their future demand and requirements are going to be. And that's cast a question mark, a near-term question mark, if you will, over gas's otherwise bright future.
Right, okay. And I mean, given that there seems to be this ongoing demand uncertainty in the more established markets, how do you view demand potential from new importers or new LNG buying countries?
Yeah, it's a good question. I mean, what we've seen, particularly in the past several years, is we've seen declines in some of your more established markets, and LNG has only grown because you have many new market entrants coming into. Individually, each one of these countries is very small, but in the aggregate, they've provided enough volumes that the LNG market continues to grow year after year. There's a lot of challenges here from these types of markets. They are, again, smaller, so you need to be a little bit more nimble to identify these markets. They come with greater counterparty risks than your established markets have. And there's a lot of policy risks involved there too. The other novel development is that several of these markets are either short-term in terms of seasonality. They're only buying to cover summer requirements, or they're only in the market for several years. The Philippines, for example, is planning on going back to much greater reliance on coal in the next 5 to 10 years. So it presents a challenge to the marketers of LNG to be able to recognize where these new demand centers are coming from and to have that flexibility to meet their requirements that are different than the established players have been.
Okay, thank you. And just to finish off, how would you describe the LNG supply-demand balance going forward, so into 2018?
Right. Well, we've just done a major study on this and looking at what some of the potential is, but even under a high growth scenario, what we're seeing is that there is enough LNG projects out there to satisfy continued demand at even rates that would be high by historical standards. One of the big headline cases out there, of course, is the lifting of the moratorium in Qatar that should add significant new capacity. But even before we get to that, projects just out of the lower 48 in the United States are set to add substantial new volumes at prices well below $1,000 a ton for liquefaction capacity. So there's a lot of volumes out there, and there's a lot of cheap capacity that's potentially out there. So as demand, or as soon as we see elements that demand will pick up even more significantly to work off the current surplus, we believe that companies will be able to reach FID relatively quickly to satisfy that future demand. It's an important development, in pushing towards that lower carbon economy that gas seems to hold the promise for. So we will not be supply constrained in the gas market, in our view, through at least the 2020s.
Okay. That's great. Thank you very much, David.
Yeah, well, thank you. Appreciate it.